The global oil market is facing one of its biggest supply disruptions in years, while Persian Gulf oil production has reportedly fallen by nearly 57% from pre-war levels, while global inventories are being drawn back down at a pace of up to 12 million barrels per day. Well, Saudi Aramco CEO has warned that even if shipping flows resume immediately, the market could take months to stabilize. If disruptions continue for weeks longer, Aramco says oil markets may not fully normalize until 2027. Crude prices have surged from nearly $60 a barrel at the start of the year to around $100, triggering fears of prolonged inflationary pressures and fuel shortages across import-dependent economies. But as prices spike, Saudi Aramco has emerged as one of the biggest beneficiaries, while the company reported a 26% jump in its first quarter adjusted net income to roughly $33.6 billion, helped by higher crude prices and strong refining margins. Saudi Arabia has managed to redirect part of its oil exports away from the Gulf using its east-west pipeline that connects to Red Sea ports. Aramco says the pipeline is operating near its maximum capacity of 7 million barrels per day, allowing the kingdom to continue supplying global markets despite disruptions in the Strait of Hormuz. Still, export volumes remain below pre-war levels, underlining the scale of the disruption. Meanwhile, oil majors including BP and Shell have also reported stronger earnings as volatility and higher prices boosted trading operations. But the prolonged disruption in the Gulf is also reshaping the global energy landscape and raising concerns over long-term supply security. Analysts estimate the market is facing a growing supply deficit of nearly 1 billion barrels, with inventories continuing to shrink each day as the crisis continues.
The challenge the market has is there is a lot of short-term effects, but I think this will drag on, and certainly we don't expect, as I said, a return to normal trading condition anytime in the near term, even if we do see an end to the conflict, because ultimately merchant shipping is very risk averse. And I think there is particularly a divergence between the risk appetite of the shipping industry and what a lot of the politicians and the ex-military pundits believe the appetite of the shipping industry. And it's actually quite low.
Restarting production in the Gulf may also take time, as several oil fields had shut down during the conflict, which will require months to return to full output. Goldman Sachs estimate that even under a relatively optimistic scenario, crude prices may remain elevated through this year and into 2027.